there are two different aspects to economic risk that I would flag. Let me start with the narrower, more specific one. I think it's a particular type of economic risk, which is sovereign risk. It's a very interesting intersection between economics and politics, and economic and political risk, really, because, I mean, sovereign risk is essentially an assessment of the willingness, but also the ability of a government to service its debt obligations. So that's a whole specific sort of subfield in the area of economic risk, and that's the narrower one that I would flag. More broadly, what I would say about economic risk is that it's really about the deviation or the potential deviation from baseline forecasts. So when you do economic forecasting, the interesting thing is that lots of people focus on the point forecast. So, is GDP growth going to be 2.2% or 2.3% or, 2%? But what's actually more relevant and more interesting is the narrative and the rationale behind those numbers, because inevitably most economic forecasts are incorrect, or they end up being wrong, and GDP growth ends up being 1.9% instead of 2.1%. So the point estimates are actually much less important than the rationale behind them. And why that's so important is because especially now when we have so much uncertainty in the global economy, it's much more important to get a sense of the why. The explanation for what the trends are rather than the point estimate. I think it's made it more challenging because obviously in the wake of the crisis there was a big increase in skepticism really about the field. And so I think, to be honest, it's put a lot of economists a little bit on the defensive, which has made it a bit of an interesting challenge. But I think the main impact has been the fact that, some of what happened was really unprecedented in a way, and so in the aftermath, a lot of the assumptions that the field had always held to be true, in fact, for decades, a lot of these assumptions have been shattered and completely overturned. The really sort of obvious example is around monetary policy. So we had one wave of what's called, unconventional monetary policies that were introduced in the wake of the crisis. Now we're seeing almost like a second wave of this with, an increasing number of central banks moving towards adopting negative interest rates. I mean, the theory had almost always held that, you can't take nominal interest rates below zero, and now we see that. And so, people are really having to rethink their fundamental assumptions and having to change models to adapt to circumstances that people thought would never materialize. Definitely a lot we could say about GDP and GDP growth as an indicator. It's definitely an imperfect indicator because, there's a lot that it doesn't capture. And again, just to take a pretty obvious example is that, it doesn't capture the value of unpaid work, which is a bit of a distortion. So it's not a perfect measure of economic performance by any means, but it is sort of the accepted standard, and for the moment it seems to be the best one that we have. In terms of demographics, and sort of relative performance, it's a really interesting point. Again, the example that you hear most often is about Japan, and everybody always talks about, Japan in a very negative sense because, you hear about the lost decade, maybe it's now a lost 2 decades, very weak economic performance, pretty much stagnant growth. However, because they've been experiencing population decline, it means that on a per capita basis, GDP per head actually looks relatively okay, which means that, living standards are still relatively okay. I think another example where you can see the difference between looking at, GDP and growth rates and living standards is, again, you mentioned emerging markets. So a lot of my work used to focus on South Asia and India, and everybody always used to like to compare India with China. And in some ways you can see it's a natural comparison, to very large markets, sort of fast growth rates. People consider them kind of stars in the emerging markets sphere. And yes, you can do a comparison of growth rates, and you can say, okay, China's growing at, 8, 9, 10%. Is India going to catch up? India's growing at 7 or 8% a year, but the point is that in a way it's not a very fair comparison, partly because the two economies have very different structures, but also because at this point in time the Chinese economy is about 5 times larger than the Indian economy. So in terms, and they've got similar populations, but what that means in terms of economic development and per capita income and living standards, pretty significantly different. I think the impact will probably be more in the medium to long term than in the short term, because if you look at sort of all the rankings of global financial centers, what you see is actually quite interesting. There seems always to be competition between London and New York as global centers, and then of course there are a number of other regional centers and emerging centers, but they all in the rankings tend to be quite a ways below New York and London. And I think that the context is that global economic growth is shifting more towards emerging markets, which makes sense. And emerging markets and areas outside North America and Europe are going to have more and more influence and more weight and contribution in terms of global growth, and that will have spillover effects in terms of their financial systems and their financial centers. But it is going to be a long-term process. And I think the other thing is that one of London's main attractions as a financial and professional services centre and a hub for that kind of activity is the fact that it's sort of a clustering effect, if you will. So London has strengths not only in banking and not only in insurance, but also quite specialised areas like marine insurance, and there's all the supporting activity around the legal services and accounting services and management consulting services. And that is actually quite difficult to replicate. So what we see is that some of the emerging centres or, potential challengers over the longer term, some of them have very particular strengths in certain areas, maybe asset management, or, you look at Hong Kong, for example, which has a lot of strengths, but a lot of those strengths are tied to, obviously, the Chinese economy and the rise and growth in China. But that sort of, comprehensive cluster is something that London and New York as well is very good at. It's true that the majority of the TheCityUK's members support the idea of the UK remaining a member of a reformed EU. And it's very difficult to quantify or to specify what the impact of a Brexit might be on the industry, and that's because there are so many unknowns. Everything is completely uncertain. Everything would really depend, if there were a vote to leave, everything would depend on the negotiations that happened subsequently and, what kind of agreements and arrangements were put in place. But, we have identified a number of key risks for the industry in case Brexit were to occur. And in addition to the sort of general uncertainty that would cause, and it would potentially be a period of a quite prolonged period of uncertainty, just because the negotiation process could take a year or 2 years, and that's quite a long time from a markets and a business perspective to have to not know what the agreements and the context will be. So in addition to that general uncertainty, we've looked at some specific risks. A big one is the potential reduction of access to the single market, because access to the single market has been a big benefit for the financial and professional services industry. Another one is potential risks around access to talent, because the industry has benefited from being able to attract highly skilled, highly qualified people from Europe as a whole, not just the UK, and so that is also something that could potentially be at risk. That is one of the key challenges that the industry faces, and I think it's a difficult question, and it's made even more complicated by some of the macro conditions that we're experiencing at the moment. So again, this is a perfect example of what I was just saying, the intersection of the macro and the industry specific. So the question about the industry and how it relates to demographics, population aging. I mean, fundamentally, this is really an issue around pensions and long-term savings. And then the complication is that, savings is made much more difficult when you have, back to monetary policy, interest rates at, rock bottom levels, it's effectively zero. And that was a situation that was meant to be temporary in the wake of the crisis, but, it's been almost 10 years of that now, and so it poses a real challenge for savers. And basically, there are no easy answers to this question, and I think the key will be for collaboration between the government and regulators and the industry to try and come up with some kind of, creative long-term solutions. My role at the City UK now it's a really interesting one because it's very broad. It's actually, in that respect, it's very, very different from the work that I did previously. And kind of going back to this idea of challenges, the breadth of the subject matter that we deal with and that I deal with personally can be a challenge because, one day you're looking at these, issues of global competitiveness and, growth in emerging markets relative to growth in advanced economies and very broad macro stuff. And one day you're looking at, something to do with, the banking sector and banking regulation. And, the third day you're looking at the industry's role, the financial services industry's role in the UK in particular. So that can be a challenge because, you end up looking at a lot of different subjects. But I think the benefit there from a sort of intellectual point of view is that, you start to be able to see patterns among all these things which on the face of it look quite disparate and separate. And then you start seeing trends and you're able to put them together and you see how they all interact and intersect. And then you get a much more comprehensive and complete and interesting picture of, how the world economy is working, how it's working in the UK, what, the intersection of the macroeconomic story and the micro in the sense of the industry that we look at. That's a really broad question. In a way, it's a difficult one to answer because obviously depending on what area in particular one would go into, the skills required would be different. Now that said, there's sort of a base of general skills which are going to be valuable whichever field one ends up going into. The one that I would probably emphasize as being the most important is communication skills, which probably sounds a bit boring because everybody always talks about communication skills. But having worked in the field, I really couldn't overemphasize how important it is. And people with really strong communication skills, both in terms of written communication and presentation skills, they're much rarer than you would expect. So if you have that, it would definitely put you at an advantage. It would be a big asset. The other thing that I would say in terms of, you mentioned the increasing competitiveness, which I think is definitely true, certainly something that I've seen myself over the years. And it's quite a challenge because I think it's really important to have particular specific skills and knowledge, but things are changing so quickly now that what those skills are and the knowledge base, you have to be quite adaptable. And so I can give you one example from some of the work we're doing now. We see the impact of digitization on the financial services industry. Fintech is obviously a huge topic. We're looking at cybersecurity as well. So what this means is that, obviously one can't be an expert in every area under the sun. But what ends up happening is that you need to have your particular area of knowledge and expertise. And then on top of that, one needs to at least be sort of conversant and comfortable in all these other related and applied areas. And the related and applied areas keep changing. So I guess that's a long-winded way of saying that, if possible, one now needs to be a specialist as well as a bit of a generalist. So it's a challenge, but it's an interesting one.